Investing your first $1,000 into stock market can feel overwhelming and even a little scary. The fear of losing money is real, especially when it's your hard-earned cash. But it's also one of the most valuable learning experiences you can have. In this video, I'm sharing everything I learned from investing my first $1,000 and the mistakes I made, the surprises I didn't expect, and the strategies that actually helped me grow my money safely. Even if you're completely new to investing, these lessons can help you avoid costly errors and start building your financial future with confidence. The first lesson I learned is the importance of research. I didn't just pick stocks randomly or follow a hot tip from social media. I studied companies, read their financial reports, and looked at overall market trends. Even with only $1,000, a poorly chosen investment can disappear quickly, but informed choices dramatically increase your chances of success. Research is your first shield against mistakes, and it teaches you discipline, patience, and critical thinking, skills that are just as valuable as any profit. The second lesson is patience. The stock market doesn't work like magic, it's a long-term game. My first $1,000 didn't double overnight, and I had to resist the urge to constantly check prices or panic during small fluctuations. Learning to stay calm, let your investments grow, and trust the process was a game changer. Many beginners sell too early and miss out on real growth, but patience allows your money to compound over time. Another important lesson was diversification. Instead of putting all $1,000 into one stock, I split it across several companies. This simple step reduces risk and protects you from losing everything if one investment fails. Even small investors benefit from diversification. It creates balance and stability, making your first experience less stressful while teaching you how to manage risk effectively. I also learned that avoiding hype is crucial. Social media can make some stocks look like instant money machines, but most of the time, they're not. I avoided trendy stocks everyone was talking about and focused on companies with strong fundamentals and growth potential. This approach protects your money and gives you confidence, even in volatile markets. Following hype is one of the quickest ways to lose money as a beginner. Tracking your investments is also key. I checked my portfolio regularly, but not obsessively. Watching daily fluctuations can create unnecessary stress. Instead, I focused on trends over weeks and months. This taught me to analyze patterns, understand growth, and make adjustments calmly. By separating short-term noise from long-term strategy, I avoided emotional decisions that could have hurt my returns. One of the most surprising lessons was how small gains add up. Even tiny profits from my first $1,000 investments, when compounded over time, became significant. I learned that patience, consistency, and reinvesting small amounts can build a strong foundation for larger future investments. The confidence gained from these early wins is invaluable, and it sets the stage for long-term financial growth. Another key takeaway: losses are inevitable, and that's okay. Not every stock or investment will succeed. The important part is to learn from each mistake. Every loss taught me about timing, risk, and strategy, and prevented me from repeating the same errors. Accepting losses as part of the learning process is critical for anyone starting out in the stock market. Finally, I realized the importance of starting small and building confidence. Investing $1,000 may not make you rich overnight, but it gives you practical experience, teaches discipline, and builds confidence to invest more in the future. This mindset, starting small, learning, and growing gradually, is what separates successful investors from those who never take the leap. Investing my first $1,000 taught me lessons that will last a lifetime. I learned to research carefully, to understand the companies I'm investing in, and to avoid decisions based on hype or trends. I discovered the importance of diversification, spreading my money across multiple investments to reduce risk and protect my capital. Patience became my greatest ally, allowing my money to grow over time without panicking over short-term fluctuations. I realized that losses are not failures, they are opportunities to learn, adjust strategies, and become a smarter investor. Starting small gave me confidence. Even though $1,000 might not make me rich overnight, the experience, discipline, and knowledge I gained are priceless. Each small win compounded into motivation to continue, while each loss taught resilience. This mindset, starting small, learning consistently, and building over time, is what separates successful investors from those who never take the leap. If you follow these lessons, your investment journey can be smoother, smarter, and much less stressful. You'll understand your money better, make decisions with confidence, and start building real wealth one step at a time. At Y Negation, comment below, what's the first stock or investment you plan to try? Share your goals and let's inspire each other to grow financially. Like, subscribe, and share this video with anyone starting their investment journey, because the earlier you start, the greater your advantage. Your future self will thank you for taking action today.